Hello traders, it is Sunday, April 14th, and it is time for my Sunday weekly video. We're going to start by recapping all the recent trades so that you can gauge the performance. That's how I gain your trust in this system. Then we're going to do some market analysis. Lots going on in the market, by the way. And I'll use our searches. I'm going to show you some search variables that you can use to find some new trades. And then I'm going to highlight one or two bullish picks, bullish or bearish picks. They've been bullish recently, but I might have a bearish pick in there for you today. So MU was a pick that we liked. I liked this over 10 days ago, highlighted during the live event. I had mentioned during the live event, it's getting a little overextended. So this was a week ago Wednesday, and we want to see the stock pull back to the EMA 8. I was still looking for a market breakout to the upside on a good jobs report. And you can see how the stock is still at the EMA 8, even though the market has been pulling back. I loved this breakout. I love the fact that the stock was able to advance after the breakout. So any profit taking was instantly offset by buyers. Buyers saw this as an opportunity to get into this stock. I like MU. I believe we are going to see a market pullback during the course of the next week. We're going to continue to probe for support. In that time, I want to see MU hold this AVWAP-E, stay nice and steady and strong. When we get that market bounce, this is a stock that you will want to consider. I like it. I like the fact that the market pulled back in here and the stock treaded water. It held all of these gains. That is a really good sign. Now we just have to wait for the market to find its sea legs. So we're going to talk about market analysis here in just a second, but MU was a bullish pick that I put out there. After that, I highlighted a week ago Sunday, SBUX. That was a short. By the way, please go back and verify every one of these picks from my previous videos. Make sure that I'm not lying to you. Go back and look at the video. I liked Starbucks. We'd already seen weakness in the stock. We're starting to see weakness in the market at the time that I recorded this a week ago. We already had that long red bar. So Wednesday when I highlighted MU, we were right here. Thursday, everything changed. We had new information. We had information that the selling pressure was fairly heavy. There was some risk off. Starbucks had broken through some of our automated trend lines. It had a full head of steam on the downside. It was below all the major moving averages, below AVWAP-E, below these trend lines, relatively weak. Checkbox, 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 checkbox. I like Starbucks on the short side. During the live event this week, I highlighted CVS as a short. Below all the major moving averages. Had recently broken below the 100-day moving average. Below this low plus trend line, it had all the right ingredients Wednesday. Let's go into the 5-minute chart. So Wednesday, 5-minute chart, live event somewhere in here around noon. You can see the stock continued to drift lower. Look at that steady, tight price action. On what? On heavy volume. All right, that's exactly the type of price action that I want. Nice, tight, orderly. Because it tells me that institutions are in there whacking, whap, 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 whap. It cannot come up for air because they are trying to sell everything they can. And then you get this beautiful follow through on Thursday and beautiful follow through on Friday. CVS was a beautiful short. So let's take a look at the market and see what it's been doing. So here's my thinking. We have a compression. We have an extremely strong strong market rally. Market rallied about 20% in 4 months. 20% in 4 months. That is a huge move, and you're not typically going to get a move of that magnitude unless you're reversing a bit of a downtrend, because that's where you get your explosive move the other way. And that's what happened. This was the selling pressure that we saw through October, and there's the rebound that started, right here in November. But in the last month, I've been pointing out that the momentum is waning. And so we were starting to see more gappy, patchy, choppy price action in here. This is when you wanted to take gains on your longer term swing trades. And here we're buying, we're adding, we're buying, we're adding, just adding. We're riding this momentum. But now that we start getting some of this choppier price action in here, I've been advising you to take gains on those swing trades. Ride them as long as you can. And until we start seeing any signs that the price action is starting to soften, we want to keep riding those trades. Well, that's what's been happening through the course of mid-March through mid-April, is now we're starting to move sideways. A lot more red candles, starting to see some horizontal resistance, but everything still looks fine, okay? We haven't had any dips. Asset managers are looking to buy dips. That's why we aren't getting any. They've been aggressive. So in here, this is the Thursday before the jobs report. We get this gap up. All right, we're near the all-time high. We're going to get a good jobs number. I think everything is set up here for a breakout to the upside on the jobs report. So what are we doing? We're selling out of the money bullish put spreads on really strong stocks. That is a neutral to slightly bullish trading strategy. We're out of the money. We're giving ourselves plenty of distance to be wrong. We're doing this on the strongest stocks. So even if the market pulls back, those stocks should hold up well. And even if those stocks pull back a little bit with the market, we're still way out of the money. We're taking advantage of accelerated time premium decay. So with one exception, and I'll show you that in a second, all of these trades are really in nice shape, and we're selling them inside of 3 weeks. So tick, 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 those positions are working out. We want to get those bullish put spreads off on the Thursday and Wednesday before the jobs report, because if the jobs report is bullish, and if we do get that breakout to a new high and we do get some continuation, our focus is going to be on bullish trades, short-term in nature. So that's when we've already got our bullish put spreads on to generate some income on a swing basis. Intraday ranges have been pretty tight, so this is an opportunity for us to get some nice bullish put spreads on. Then we're going to shift our focus to trading that breakout Friday, Monday, Tuesday. Should see some nice follow through into mega cap tech earnings. That was my mindset heading into Thursday. Everything changed Thursday, and I've been extremely vocal about it on Reddit, on Twitter, in my videos, that this was a gigantic warning sign. Did it turn me bearish? No, and I'm still not bearish. I'm neutral, because this selling pressure that we saw was not just a mamby-pamby sell program. No. There was much more to it than that. And we knew that, so we get this gap up. Market's able to preserve almost that entire gap. So usually if you're going to see a gap reversal, you're going to see it pretty early, and you're going to get some nice long red candles in here that fill in a good part of that gap. That didn't happen. And so in here we get this wimpy little pullback, and we're still preserving most of the gap, and we're still staying close to the resistance level. This is a nice opportunity to get long, and I thought we might have a chance to continue higher ahead of the jobs report. Didn't happen though. And what happened was we couldn't get follow through on this new high, and then everything compressed. Well, this was a time you had your day trades here, bullish swing trades, bullish put spreads, different story. We're not worried about this even, okay? Didn't like it. But this told us, hey, don't be putting any more bullish put spreads on, okay? We need to wait to see how this plays out, especially when the red candles started to stack and when we saw this heavy selling volume. So we're looking to put more of them on midday and on that follow through to a new all-time high. Didn't happen. So day trades here, you've got to be careful. You got to exit your day trades, get out of them. You don't want to be painted into a corner. You know you want to get out ahead of a major news event the next morning. So if you're in the right stocks, you're even taking gains on a lot of those. But so get out of your day trades. Oh, now we get this big pullback. Alrighty, we have new information. This is heavy selling pressure. The S&P 500 moved about 120 points. That is way above its 20-day ATR. In fact, about 200% of its ATR. Normal ATR was about 40 points. This is 120 points. Red flags going off all over the place. Okay, we're not going to go from neutral to bullish to just flat out bearish. That's not going to happen. No, we still got a lot of buyers out there. We're going to get a bounce. I had mentioned to members, if you were overextended on the swing side and you had a lot of long exposure, you're going to get an opportunity to exit those positions. And that was right in here midday Friday. Do not miss this opportunity to take risk off. You were wrong in having that much risk exposure in the first place. We've been relatively passive for quite a while. This is your chance. Okay, take it. So now we get some follow-through selling, and the market has gone in both directions. This is also consistent with my intraday market comments and my pre-open market comments. I've told everyone, in fact, in the video last Sunday, I said, we can expect some big daily ranges this week. This is going to be good for day trading. And the reason for that is because buyers and sellers are paired off. So we've seen selling pressure. We know that buyers have been in charge for many months. So we're going to start seeing some of these big intraday ranges. That's exactly what we got. So when one side has the ball, they run with it, they take it as far as they can, and then we can expect reversals in the other direction. Before I continue, do not for a second believe that buyers are going to roll over and play dead. There is no reason to believe that. Strong economic conditions. Let's talk about the jobs number. 300,000 new jobs created. That's a fantastic number. Initial jobless claims have been very, very low, week in and week out. This is a strong economy. Wage inflation, 0.3%. That was good. Okay, so everything is intact here. That means that credit concerns are fairly minimal because people have jobs. They're paying off their credit cards. Now, they may not be spending as much eventually with high credit card interest charges. Banks were going to be releasing earnings. They started on Friday. Decent reaction with the exception of JP Morgan Chase. Banks are going to be releasing earnings this week. We're going to start hearing from some regionals. Regionals are going to be a mixed bag because some of them have more risk exposure to the commercial area. Some of them don't have that exposure. They should perform really well. Higher for longer, people with jobs. It's good for bank earnings. Even JP Morgan Chase's earnings were actually quite decent. The stock had run up a lot. Perhaps that's one of the reasons that it pulled back on Friday. But my point earlier was this market rally was not fake, and we know that from the tight price action. We're going to see dips along the way. This would be the first decent dip that we get, and I think we're going to get some follow-through selling. So the Middle East tensions are escalating. Iran sent missiles over to Israel. That's going to weigh on the market Monday morning. So watch for a bit of a drop. I don't know what the futures are going to do. It's Sunday midday, so we're probably 3-4 hours from even having a glimpse at what the S&P might do overnight. Probably going to drop, okay? But I'll tell you that wars have a minuscule impact on the market. Very, very temporary. Maybe it'll last a day or two. Okay? Even in the Ukraine war, which has been going on for more than 2 years now, I'm sorry to say, from a market standpoint, it's no big deal. It just isn't. Not talking about it from a humanitarian standpoint. Very important decision to make. I'm not here to talk about humanitarian issues. I'm here to talk about the market and how we trade. So, market impact, Iran bombing Israel, not going to be a huge deal after a few days. And yes, you're going to hear about everybody saying, oh, the U.S.'s involvement is going to become more pronounced, blah, 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 blah. It's not going to make a difference to the market. The selling pressure was already apparent before we had any kind of bombing in Israel. And we started to take out the low from that Thursday and leak below it, and we tested the 50-day moving average. We're also below AVWAP-Q. I believe this probe is going to continue, but you can see from this candle here that it has been herky-jerky, mixed overlapping candles, and I'm expecting a stubborn drift lower. Sell-off bounce, sell-off bounce, sell-off bounce. So just little dips that retrace, dips retrace, dips retrace. And the reason for that is that buyers are going to remain engaged. They are interested. They have been conditioned to try and buy dips, but they haven't had any to buy. That's how aggressive they've been. So you're going to see some support, and I'm thinking around the $500 level because was resistance, now support. This is a nice little horizontal level. 500 is a psychological level as well. I wouldn't want to see a pullback to the 100-day moving average. That would be a little bit deeper than I would like to see, and that would also make me believe if we do get down to that 490 level, the 100-day moving average, we see a quick drop down to that, that's going to tell me that any little bounce that we get up to the 50-day, that would set up a shorting opportunity, and I would be very confident in that. Why? Because in order for us to get there, and in order for us to get there quickly, that is a sign that buyers are not as aggressive and that sellers are aggressive, okay? So that's one thing to watch for. I don't believe that is going to happen, but that would make me more bearish because that next rally that produces a lower high double top would tell me then I can start looking for some bearish swing trades on a longer term basis with a weak market during the summer. But I don't know that that's going to happen, and I'm not expecting it because of this strong price action. I'm just telling you how I'm going to be adjusting my thinking based solely on price action. And I don't care why institutions are selling. I only care that they are selling. So stubborn price action, mixed overlapping candles tell me that everybody's cool, everybody's still on board with this rally, everybody's still comfortable with the economic backdrop. And then somewhere around this $500 level, as mega cap tech earnings get closer, we see that bounce. That bounce could be material. It could take us through the 525 level to a new all-time high. Then all of a sudden, these people who are bearish, oh my God, the war, oh this, oh that. All of a sudden, you get this big rally and they're forced to cover and you get a substantial leg higher. It can happen. I've seen it happen all the time. AI has everybody worked up in a lather right now. That's all they care about. AI, oh my God, it's going to be the next big thing. And when companies are tagged with, hey, this is an AI leader, Google, Microsoft, Meta, those stocks don't even have to produce any income off of AI. They just have to be in that space and they'll be given a free pass for quarters, many quarters, because when everyone does figure out how AI fits into the economy and what the prospects are, then those profits will come, and then those stocks will start to take another leg higher. So right now, AI is the buzzword, and everybody wants to be in this space, and everybody sees unbelievable potential. That's all you hear. So, okay, I've been through the dot-com era. I know how this works, and it doesn't have to make it doesn't have to make sense on a PE basis. For a very long time, these stocks can stay overvalued, and I know that investors have a lot of staying power, and they're willing to ride this horse hard for a very long time, even without those profits. So I believe you're going to see a rally into mega cap tech earnings. So what I'd like to do today is I'm going to find a bearish pick, and again, I'm looking for a stubborn move lower. I believe buyers and sellers are going to be paired off. I think there's going to be an opportunity for us to short, and I believe there's going to be an opportunity for us to buy. And right now, on a 5-minute basis, when you get buyers pushing the market higher, 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 and the market stalls and it can't advance, well, they're going to be giving the ball over to the shorts, and then the shorts are going to take their chance. So you're going to see these nice day trading opportunities both ways. Okay, and so what traders tend to focus on is what side they think is going to prevail, as opposed to being nice and balanced and just simply evaluating price action and looking for opportunity. And so a classic example, and in my video last Sunday, please go back and watch it. I told you exactly what was going to happen this week. We're going to see two-sided trading. We're going to see really nice intraday ranges. And I explained why, and I just did so again. So you've got sellers in control, big gap down, whap, 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 whap. Okay, couldn't crack below that low from last Thursday. Whack, one more try at it. Still couldn't get down below it. So now we've got this firm support level, and we're starting to see some nice green candles in here and a grind higher through VWAP. We even get these green candles. So this is a nice opportunity on the notion that we're going to see two-sided price action to get long in here, especially above this move above VWAP. So now we get this long green candle, and we hold all of these gains off of the low. That is bullish. Now we break out to a new high of the day. This is a sweet spot. Really nice area to get long those bullish stocks that you have been vetting. Take your gains for day trading. Ooh, big gap down. Sellers have the ball. Can't fill this gap at all below VWAP. Okay, now we test this support level. Maybe there will be a good buying opportunity in here because we've seen support there earlier. So market tries to rally, mixed overlapping candles. These were more stacked, less retracement. This is a higher quality move. This is not as strong a move. Couldn't get through VWAP. So if you played the bounce, you had to take your gains in here and look for some possible selling, and you've got a bearish 1OP cycle starting in here. Okay, I think we're going to test the low. Get short in here. Not only do we test it, we take it out. We expect that we're going to see some buyers here. Bye-bye-bye, 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 bye-bye-bye. So you always want to buy on support. That's what we're told. Buy on a support level. Then you have a tight stop because you should find support. You can stop out if you break that support, and you have nice upside. So these programs know where buyers are lined up. And as soon as they take those support levels out, they trigger these sell stops, and you get a nice whoosh lower. And now you get a drop the remainder of the day Friday, and we sit on the 50-day moving average. My message is, on a swing trading basis, I would keep it really, really light right now, especially on a longer term swing basis, because we don't know what's going to play out. There will be some shorter term swing trades, Intraday is really the place to be because you're going to have these big ranges and beautiful opportunities to buy and ride it, take gains, and sell and ride it. So as soon as you see the momentum stall in one direction or the other, be flexible, be ready to consider trades on the other side, and know that the D1 chart is supportive of fairly neutral trading. We didn't have any good bearish candidates until about 3 or 4 weeks ago. Now in the last week or two, we've started to see a lot of excellent bearish candidates and some really nice breakdowns. So my sentiment is we're going to continue to see good ranges, going to focus on day trading. I'm going to give you a bearish pick today as my pick of the day because I think we're going to see a probe lower for maybe another week. Then we're going to start to establish support, and I'm looking for that stubborn move lower. Stubborn with lots of retracement tells me that buyers are still engaged, and then we're going to get that nice bounce. I don't want to see long red candles down to that 100-day moving average, and I'm not expecting that. So tomorrow morning, don't chase shorts on the open tomorrow. Do not do it. If the futures gap down because of the news from the Middle East, do not short that. We're already going to see some weakness. At very least, you would need a bounce, shallow and brief, and then you could short on that bounce. So, how do we find really good candidates? Well, let's go in and let's run some searches. So we're going to start with bearish search. First of all, I want to have decent option liquidity. So I'm going to go with I could go with a 0 rating, -1 rating. Those are going to be nice. I'm going to be looking for a stock that's below AVWAP-E. So this would be bearish. And I'm going to be looking for a stock that is through the 50-day moving average. So it's at least had some weakness recently. And let's see what kind of results we return here. Too many. I mean, look at this. I'm not going to flip 100 charts. No. I've got to cast a wide net and then I have to draw it in. So what else would be good? How about some weakness relative to the market? That would be good. Phew, still too many. All right, how about a trade signal bearish on a D1 basis? Better, but geez, we're still getting a lot of candidates in here. How about a stock where LRSI is below 20 on a D1 basis? That means that the market has just started to soften a little bit, but this stock has been in selling mode for a while. Still a lot of candidates. These are all variables that you can select from in Option Stalker Pro. You won't find a lot of these variables elsewhere. All right, let's add another one. So I don't want to chase, right? Because the move is just starting to roll over. So I'd rather catch something early in the move. So maybe I'll use something like a compression breakdown. And a new one means that in the last 2 days, this stock has broken down from a compression. Okay, now I've got 15 stocks or so to look through. So very manageable list. I'm not looking for choppy stocks. I'm not looking for lots of tails and wicks. I want something that's got some nice orderly price movement to it and that trends well, and that's broken some major support levels. So no, that's not going to be one I like. This is nice. I like ACN. I'll tell you right off the bat, I like this. So you've got nice trend. Once it's established, it tends to continue. Nice orderly price action. Look at this nice orderly price action on the way down. That is some heavy dang selling post earnings. Has not been able to recover below the 100-day moving average. And here you can see these are our automated trend lines. It's actually below what I consider to be a balanced trend line. Nice spacing from the start point to the endpoint to the intercept. And that is a significant breakdown. ACN is going to be my pick. I'll go through some more, but I like this. So I don't need to chase because we're below that EMA 8 and we've distanced ourselves from it. Look at the 5-minute chart. Nice steady selling on heavy volume. All the check boxes are marked on this one right now. So what I'm going to do is, let me just check the M30 on LRSI is below 20. Okay, you can see it here. It's below 20. What I want is I want it above 80 and then I want it below 80. So I'm going to select that alert, and ideally we see a little bit of a bounce that gets it above 80 and then it rolls over, and it was not able to recapture all of this move. Half of that move I would be cool with, and that will lower the EMA 8 over time, or the stock will bounce a little bit and get closer to that EMA 8. So right click, M30, create alert, LRSI, M30, I want to see it below 80. Right now it's already below 80, and that's the beauty of our alerts, is the servers know, hey, you're putting an alert out there, it's already below 80, I would just be alerting you right now. So obviously what you really want is you want that indicator to be above 80 and then cross below 80. Yes, that's exactly what I would like. Very easy to set. And so now when LRSI goes above 80 and below 80, I'll be evaluating that bounce. I want it to be brief and shallow. I don't want to see a lot of stacked long green candles. If I don't see that, that's going to be a nice entry point, and I don't want to see any big market rallies either. Some bounces like I'm expecting, but I don't want to see any kind of big liftoff in here. If I have all of those ingredients, ACN is going to be a really nice candidate for me. I love this price action, love the breakdown. I like this one a lot. So I'm going to click through some of the others. Adobe, week before the market was. Nice little breakdowns in here. It would have to get below this trend line, below this low of the day here for me to be interested in it, but Adobe's a nice short. AMC is a cheap stock. I don't short stocks under $5. Amgen finding support here, not interested. Baidu, nice long red key bar. Let me mention something on Baidu. So Baidu, I did a bullish put spread. I was telling you about the bullish put spreads that we've been putting on before the jobs report, expecting the market would be able to rally higher. This stock had shown multiple support at this horizontal level here. It also had this upward sloping trend line right here. It was above the AVWAP-E, the 50-day moving average. I felt that it had put in enough of a base to where I could sell an out of the money bullish put spread. I did this in the chat room. I did not do this on any of the videos, but on Wednesday's live event, someone asked, hey, what should I do with that Baidu bullish put spread that you had shown us? You should buy it back in, is what I said. We had sold the May 3rd expiration, and I was keying off of this strength in here. Okay, the stock was bumping up against the 100-day moving average. I didn't really care that it hadn't moved through the 100-day moving average. I was expecting it to on a strong jobs report. So upward sloping trend line we're leaning on, plus AVWAP-E, plus the 50-day moving average, and we were selling that bullish put spread down here below the support at 102. So short the 102 put, long the 100 put. Well, I had mentioned in here during the live event Wednesday, yeah, you should be buying back your 102 put and let the 100 put run. And so on Wednesday, the stock was somewhere in here, and those puts, the 102 puts were trading at about 405. And so if we take a look at those, make sure I'm in the right expiration. I am. So yes, $4.05 is where they were offered, so you'd be able to buy those back. And then you would just hold the $100 puts. and you've gone from actually a neutral to slightly bullish position to a outright bearish position. And the reason that you're outright bearish is because all the technical support levels that you were leaning on that should have attracted buyers didn't. And so now that we're through that technical support, you become bearish on it. We had plenty of time till expiration. And I think these options were 450 bid Friday. You can see they widened them out on the close, but you would have been able to make 50 cents roughly between what you paid for the 102s and what you got out of the 100s for. Plus you put it on for a 40-cent credit. This is a nice winner. But this is the type of trade where I don't hang out because I was wrong initially on that trade. I was able to make money on the adjustment. I'm going to take the money, wipe the slate clean. I was able to dodge a bullet, and now I'll see what the stock does. Plus, it has horizontal support here, and you can see this pink line as an alert line. So we'll see. If Baidu continues lower and it takes out that support, yeah, I might consider it on a trade of its own, a new trade to get short that stock. But right now, it would not be of great interest. Sorry to sidetrack there, but I had to mention that. This is a compression on crowd. I have an alert right here. It's not particularly bearish. I would need to see a crack down through it. Nice big bounce, nice big sell-off, volatility. Not my favorite kind of stock because it's been really moving in both directions, so I would kind of avoid that. Lulu, this has been a nice short. We've been trading in a chat room, overextended away from that EMA 8, wouldn't have interest in it. Mitch, a little bit too herky-jerky. I don't have that clean breakdown yet that I would need to see in order to want to short it. So I can set an alert there, GTC, based on that price point right there. If it can get below that, with steady price action and heavy volume, I'd be more interested in it. Net, still compressing. Alerts are set. ON, a little bit herky-jerky on the way down, but not far from the EMA 8. Nice long red candle. We know based on other long red candles like this one that they tend to retrace. So this one would be one to set an alert on. When it does bounce, you want it to preserve that trend line there and be below it, and then continue lower. So right click, I like ON. I think ON could be a nice short. Let's go with a 50-minute LRSI. And we're going to be looking for that M15 to be below 80. It's already below 80. So the stock is going to have to bounce. LRSI get above 80 and then cross back below. Stock rallies up. I get that LRSI cross in here. I want a brief shallow bounce. I want to see that support level serve as resistance. When this LRSI 15 goes to 80 and then crosses back below 80, if I have that horizontal resistance intact, it will tell me that this is going to be a good short and that the stock is going to continue to be weak relative to the market, and I'm expecting that market decline and that continued probe for another week or so. So this could set up to be a nice short. I'm just going to click through a couple of others here. RH, not interested, a little too choppy for me. But this is how we find these candidates. Alerts already set here. We can get through that. Then I think STX has a chance to pull back, but there's nothing for me right now. UAL kind of poking through, UPST. So, all right, it took me a little bit of time to, this is actually pretty nice. I wouldn't mind seeing this poke right below this horizontal support level. So maybe at the 261 level, that would make sense. Right click, create alert. We're going to use a price alert in this instance. So right here, price, go there, 261. This is how you set yourself up for the following week. When the stock is below 261, I want a dang alert. Save that baby and let me know, because this is a nice balanced trend line breakdown with room to the 100-day moving average. That is how we find trades, everybody, okay? This is how you should be spending your time when you're not trading. So if you're in a trading day that's really dull and nothing's happening, this is what you should be doing. When you're looking for opportunities on a Sunday, this is what you should be doing. You're setting yourself up. So during the week, click, 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 click. Here come my alerts. Ooh, look at the market. Hey, it's selling off. This stock has done exactly what I expected it to. It had a bounce. That bounce was brief and shallow. I've got the market looking to sell up. Here comes the stock. Boom. You're in the trade. Okay? You're always productive. You're always proactive. You're not waiting for the move and then scrambling around looking for something that's broken out. Let's find a couple of bullish stocks because, as I had mentioned, I believe we're going to get a pullback and then we are going to get a bounce. So I'm going to clear the upper, clear the lower. What would I be wanting to look for? Option liquidity, still very important. And we're going to make this very, very quick. All right. I'd like to see D1 relative strength. I need a stock. That's our edge. I always want a stock that's got good relative strength on a daily basis. And I'm going to use pre-earnings bull. We know this because we've measured it. Once the stock has gotten inside of a 2-week window from its earnings announcement date, it has had a tendency to rally more than 75% of the stock, more than 75% of the time. So repeat this. 12 quarters, we looked at what the stock did once it was inside that 2-week window, and 75% or more of the time the stock has rallied. So there is interest in these names going into the earnings announcement. And these are our candidates. This is what we want to look at. I'm only going to look at a few, so I'm going to scroll through. I'm going to go mega cap tech, Amazon. Amazon's going to be in AI. They've got AWS and all the servers and all the data. Google, AI. LRCX, chip stepper manufacturer. Microsoft, AI. It's all good. Spot's pretty cool in here too. Let's take a look at some of these charts. Amazon, any market dip, Amazon pre-earnings, excellent, excellent strength in this stock. You're likely to see some bounces in this one. Goog, beautiful breakout. Look at this breakout right here. Through horizontal resistance. During a market pullback, this stock wants to go higher. Any dip, I like Google. Yes. Microsoft, compressing, okay? During a market decline, put your little alert trend line in here. If it breaks out to the upside and you get that market dip, yeah, Microsoft is probably one that's going to go. You'd like to see it get through that resistance like Google did. So right now, out of those stocks, I'd have to give Google probably the pass, and Amazon looked really good too. Amazon just hasn't broken out. Google already broke out, okay, and it's holding that breakout right in there. So I like Google. And I had one other I wanted to take a look at, which was Spot. Spot is going to be your long pick. I mean, look at this stock. You've got a market pullback. You have a stock that got through horizontal resistance, bullish hammer through, and it's been able to add, and it's been able to hold when the market is pulled back. This is extremely strong price action. I love it. When the market was down on Friday, what did the stock do? Down, down, down. The stock treaded water after making decent D1 gains. If there were sellers in this stock after a nice little run up like this, blam, 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 profit taking, sell that thing. I want to take profits. But there were so many buyers that still wanted to get long the stock that the market selling could not put a dent into the bid. This stock is going higher. This is our edge. I like Spot. I would wait for that market pullback. When you get the market pullback, The stock has a tendency to rally into earnings. It's been super, super strong. I believe it continues higher. Yet that market pullback, stubborn price action on the way down this week. Mixed overlapping candles, sell-off rally, sell-off rally, sell-off rally. Stubborn, stubborn, stubborn. That tells us buyers are still engaged. You wait a week, you get that support, maybe above the $500 level. That is when you start looking at spot. Until then, I think ACN is going to provide us with some good opportunities. I think ON could provide us with some good opportunities. This is how you find stocks. We've got fantastic searches, but you have custom search too, and you have all these variables. Find some of your own searches. You can find some really incredible, incredible searches. I've only given you a couple of examples. They're almost limitless. Please subscribe to my YouTube channel. That's how it grows. That's how I can get the word out to many other traders. I'm trying to teach you all how to trade. So please subscribe to the YouTube channel. Tell other traders that you know who are trying to find their way. I think my content is really going to help them. Good luck with your trading. Those live events on Wednesdays are packed with lessons. We answer your questions. There's a very good chance that the question that somebody else posed to us is a question that you have as well. So we never know where those live events are going to go. If you can't attend it live, please make sure to watch those recordings. Good luck. We will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.